Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Right now, the most important essay every morning in the earnings season is from Julian Emanuel, holding court at Evercore ISI with one Ed Hyman, and we're thrilled he could join us today, their Chief Equity Quantitative Strategist. Once again, you have outlined how we got earnings wrong. Do you believe we'll get earnings wrong quarter ending September 30?
We invariably do. So we came into this season believing, and again, look, this is corporate America. There is the baseline predicting earnings growth, and there's the surprise. We almost always surprise positively. I think in our view, what happened was the market was actually surprised by what in retrospect is not that surprising, a surprise, Tom. So you're getting 10% earnings growth. But what's more interesting to us about this season is the degree of the stock price response has been unlike anything we've ever seen, both to the good and the bad. And frankly, it isn't that entirely dependent on the scope of what they report. A lot of this is positioning, but you've had moves just incredibly dramatic in both directions. And that points to, in our mind, to a question about where we're going in terms of earnings next year within the context of the fact that bottoms-up consensus is looking for 13% earnings growth in 2026. That's a bit too high in our opinion.
You don't bury the lead here with your most recent note. Near term, we think stocks are overvalued, 7 to 15% pullback into an October low. That's not consensus.
So I guess this goes back to the scars that we've had by being excessively bullish coming into Labor Day from time to time. That is almost always a strategy that runs into difficulty. But again, it goes back to whether you think about it in the context of earnings expectations for 2026 or you think about it in terms of valuation. And to be clear, we're not at all-time high valuations like the Y2K.com bubble, but we're not far away. And in our mind, part of what's gone on this summer is really a belief that because we haven't seen a discrete drag in terms of growth to tariffs and discrete underpinning inflation, which we do believe we're going to get first evidence of this week with the CPI report, people are just, don't worry, be happy.
Let's go there right now and bring Ed Hyman into it. You have this huge advantage of Ed Hyman and your economic apparatus at Evercore ISI. Are you modeling your equity market for a sustained 3%, or dare I say a four-figure inflation?
3%. And if you think about it, right, what we have seen off of the trough in April, which I believe I was on with you all, we were pounding the table that you wanted to own it because we had seen capitulation of a degree which we had only ever seen at the trough of the financial crisis in 2009, is that basically the difference between the recovery that we saw then and the recovery that we saw actually during the bear market that was briefly in 1998 in the midst of the internet revolution versus the AI revolution now, the continued response where NASDAQ rose an additional over 100% into the Y2K bubble, it's not going to be like this time because, frankly, the Fed doesn't have the leeway to be as accommodative, even though we're expecting it.
Is this the gloomy Emanuel this morning?
It might be. It sounds realistic to me. It just, we got scolded last week for calling it a melt up. Do you think we experienced a melt up over over this 20%, 25% move off the bottom?
Oh, yeah. There's no question about the fact that if you measure it in terms of nothing more than public participation, The public has been driving this market in large degree. And you see that in, sort of an esoteric area of the world, 0 days to expiration option activity. The positions go on at 9:30, they expire at 4 o'clock. That is accounting for upwards of 60% of the option activity.
So what are you doing now at the margin to purchase equity shares? Are you in Evercore ISI on hold now?
So basically what we're saying is you have to think long term. There's a certain slug of investor that should just ignore what we expect to be the volatility of the next couple months. But if you're more active, what you're thinking about is right sizing your AI exposure to accomplish long term. There's going to be continued outperformance, but you want to hedge. You want to hedge with lower valuation stocks, with higher earnings revision type names. It's an element of safety and that builds the portfolio. And actually, if you think about it, enables you to be a buyer of dips.
There you go.
There you go. Simple as that.
Yeah.
Julian, thank you so much. Julian Emanuel with this Evercore ISI. We protect the copyright, folks. I'm not going to send out his 3-paragraph effort that he goes right every morning. His team does it, folks, to be honest. But it's exquisite on where are we in the earnings season. It is the industry benchmark. He does that. Julian does that at Evercore ISI.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Joining us now, deep in the summer, Saidel-Baker, economist, ITR. We love her work out of Wellesley and Boston University. I'm going to audible right now. One of the greatest views of Mount Washington, like spiritual 19th century, is from the Conway, North Conway area, right?
Yes.
Conway.
You go up there a lot. There's bar in the woods. It's in the middle of nowhere, right?
We have to get away from Fed Talk sometime. That's where I go.
This is on the New Hampshire border with Maine, right?
Correct. The White Mountains.
The White Mountains, but it's a different White Mountains than driving up the interstates.
Mount Washington Presidential Range. Yeah, it's a lovely place to hike.
It's great. When does the snow pull back? June?
Oh, there has been snow every month of the year on the summit of Mount
Seriously?
Washington. Yes.
Wow, nice.
Okay. Well, great to have you here. Welcome 92.9 FM up in Boston as well. We go up to Mount Katahdin, Millinocket. Good morning. Saidel-Baker, AI and its effect on our economy. Do we understand our productivity? Do we understand what's going on in technology?
I don't think we have a full grasp yet. I think there's a lot more to be done with AI and productivity. We, to date, haven't really seen the gains. We see the need, right? We have a very tight labor market. We still have very critical skills gaps. But overall, I think we're still looking for those fits. I see a lot of companies doing the throw money at the problem approach to AI. They're telling their employees, just use it somehow. I don't care how, but do something with AI. It's not always the most effective. It's not always the most cost-conscious way to use AI.
Lauren, I know in your research you work a lot with small, mid-sized companies. How are they dealing with tariffs, trade uncertainty, maybe a little bit of inflation percolating out there, maybe a little bit of a slowing economy? How are they seeing things?
More than anything, they're in a wait-and-see mode. We see this just with uncertainty, with tariffs, with every new policy that no one saw coming even a week ago. Everyone just wants to know what they're up against, but I'm getting the sense lately that that tide is turning. Mm-hmm. I think we almost have uncertainty fatigue. At some point, you just need to make a decision.
She's way too optimistic for this show. I mean, let's start there, Paul. Paul, I think this is a really, really important point. Goldman Sachs publishing this weekend with a 3, 4, 5 month rollout. So do you buy the gradual roll into tariff angst for our listeners and viewers, or are you going to be a Saidel-Baker optimistic?
I can't be an optimist. I am an economist after all. Those two are mutually exclusive. But at the end of the day, we see businesses really making decisions despite even something like tax implications, right? We talk about tax rates. We have found in our analysis that does not materially change business profitability over the long term, business investment over the long term. So it seems like the business world, they have a sense of what they need to do. They've been through the MBA programs, right? They know the theory behind it. And so it's just a matter of doing it at some point. We've had a multi-month uncertainty delay. We're starting to see the rubber meet the road.
How do you think the Federal Reserve is going to react to all this uncertainty? What are you guys thinking about that?
Really, I see inflation more than anything else being the key deciding factor. Labor market, as I mentioned, still tight, some cracks forming, but I still see general balance in the labor side of things. It's really the inflation side of the dual mandate where we are starting to get nervous. I think tariffs are taking much more time to feed through. So whether you believe tariffs are a one-time step up in prices, we see other fundamental pressures. I don't think tariffs are really going to come through the data for between 9 and 18 months is on average how long it takes. So we're not there yet.
The consumer seems to be kind of hanging in there. I know there's a bifurcated sense of the consumer, the mid to high end doing quite well, the lower end maybe struggling. How do you think about the consumer?
All we can do is look at the median consumer. So you're right. There's a lot going on beneath the surface. If you own your home, if you're invested in equity markets, versus if you are really feeling this pinch of inflation, tariffs specifically, they hit those lower income earners much more strongly. That's just how the math works out. But on median, again, with a tight labor market, more folks can get jobs. Yes, there might need to be some reskilling. There are some skills gaps that we still see. But overall, more people making more money, wages are still outpacing inflation.
We go to ECO Go, they go to Lauren Saidel-Baker. The CPI is a tick up. I mean, basically, a CPI ex food and energy month over month, McKee looks at it, I don't, 0.2 to 0.3, year over year 2.7 to 2.8, regular CPI 2.9 to 3.0. I get the nudge up. Do you look at that as a linear function, dare I say, out there, 4%? Top line CPI?
I think that is well within the range of possibility.
What is the outcome of that? Forget double major, Wellesley, economics and religion.
Yes.
That means she went to Patriots Day, Red Sox baseball. Okay, you're a religion major from Wellesley. What is the political religion of this nation the day we print 4%?
At that point, I think the Fed has their hands tied. I think we might see a couple more rate increases, call it 25, maybe 50 basis points. I know I've been hearing talk of 3 cuts this year. I think that's going to be a tough reach.
Some people out there are talking, you're not listening to the show enough. Some people are talking 7 rate cuts.
I've heard 7 in 2026.
And you're going the other way with you. I love your optimism, seriously, folks. That's why she's here. But if we get Lauren Saidel-Baker optimism, we get 4% CPI.
Yes.
What does that mean to our listeners and viewers besides the grocery store is expensive?
I think you can't be waiting for rates to go back to the lows that they were just a few years ago. I see rates going up, not down, and again, maybe a couple bumps in the road to get there. But I really would be, if you need to be doing borrowing or refinancing, now is the time to do it. I'm not waiting to time the low. For the sake, unless you're very, very interest rate sensitive, the sake of 25, maybe 50 basis points, what are you foregoing? What's the opportunity cost of that? To risk timing that exact low, I don't think it's worth it.
What's an unemployment rate that you think gets the Fed's attention here? Because right now you mentioned,
Good question.
The labor market's pretty solid, although maybe it's tougher to get a job than it was a couple of years ago. But generally, most people who want jobs have their jobs. Wages are growing 3%, 4%, 5%. What is your view of the labor market?
So one metric that I'm looking at, even more than the unemployment rate, that's the balance between unemployed workers and job openings. That's 1.04. So just a hair over 1 worker per available job opening. Now, that balance, I think we are in balance. It's just that both of those numbers are lower. There are relatively fewer job seekers right now. We'll see that trend continue with negative net migration this year. But we also have fewer job openings as businesses, they're just holding back. They're waiting. So that balance, I think on both sides, we can be in balance even at lower levels. It's just easier to knock it out of balance.
Out on YouTube, a brilliant live chat. Thank you so much for this. Quote, "The rich get richer, the poor get poorer." I mean, that's really what this is about, isn't it? The rich, don't care, 3.84%. They're like, whatever, just, buy the avocados. I mean, it's a partition of the country, right?
At some point, again, many more of the wage gains in the past couple of years had been concentrated at the lower end of the income distribution.
But the real wage goes negative here with what Paul Sweeney's talking about, right? Higher inflation.
That's the risk. We can only look at the median. I wish we had more granular data across the board. But on median, our net consumer is still doing better.
This has been great. Thank you for coming in from New Hampshire.
Yeah.
Really, appreciate it.
Thank you for having me.
As well.
Yeah, good stuff.
They're up there, you know.
Waterville
Land
Valley,
of
I
the
liked
Black
skiing
Flag.
up there when I was a kid.
Oh, come on. Cannon Mountain. It's like the Ice Age.
Yeah.
I almost lost a child. This is over in Vermont, folks. I literally had to hold on to the middle child at the top of Jay Peak. It was like 100 miles. It's not west. You got to understand, Lauren, Sweeney doesn't ski the east.
No.
He's so large, he's only doing Rocky Mountain High.
Exactly. I mean, I grew up skiing all through New Hampshire, Vermont, Poconos. You know, shout out.
No, that's where I saw you.
I got my first
I
bonus.
saw you at the Wobbly Barn.
Yeah, exactly.
It was a few years ago.
Yep, got my first Wall Street bonus check back in the day. Haven't been back east since.
Lauren Saidel-Baker, thank you so much. ITR Economics, New Hampshire.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Last night, we had a meeting. This is with Surveillance Senior Executive Producer Eric Marlowe, Herder of Interns.
Yep.
It's his new title, Herder of Interns. And we had a list of people, and at the top of the list on Putin, Trump, and Alaska was Angela Stent. Her book, Putin's World, is absolutely definitive. We are beyond honored to have a conversation this morning with Angela Stent. Angela, if you were in Alaska for this meeting, what would you listen for from the two?
Well, I'm listening to see what it is that Putin is proposing to President Trump. And so far, it seems that, you know, Ukraine is supposed to cede territory to Russia that Russia doesn't even control, and really not get very much in return, maybe a freezing of the battle lines. And with Trump, I'm listening to see, does he really understand that Putin isn't willing to stop this war, that he's being played? So those are the things that I would be listening to.
You know, I look, Angela, at this, and of course, in the zeitgeist this morning is the Bild article in Germany that they got the translation wrong. Do we have the process and apparatus to prepare for Friday's meeting? I mean, do we have an administration in place that can do this?
So far, it doesn't appear that we do. I mean, normally these kinds of summits are well prepared in advance. They're experienced diplomats who are involved in them. This is the result of, you know, a long conversation between Stephen Witkoff, not a diplomat, not an expert on Russia, and Vladimir Putin. We don't know the contents of it. And so we are really left in the dark about what the process is in this. And the concern is that President Trump will be there and that he doesn't have all the backing he needs and the understanding going into this about what Putin's actually trying to do.
What is the role, if any, for President Zelensky?
Well, so far, President Zelensky, of course, has been excluded from this. The U.S. and Russia are talking about his own country. President Trump has spoken to him. Zelensky is in very close contact with the Europeans. The Europeans are trying to impress on President Trump that he has to go into this clear-eyed and realistic about what Putin is trying to do. But to think about two countries trading away another country's territory without that country being present, I think that bears a lot of thinking about.
Does President Putin have any intention to sign a ceasefire on Friday or even discuss it?
I very much doubt it. I think what he's trying to do is to probe and see how much he can get from President Trump. So I would not hold your breath on that.
Angela, I get the drama. Max Boot writes it up in the Washington Post and others. And we don't need to do a history lesson on 1938 in Munich, where Neville Chamberlain gave away a piece of Czechoslovakia, and look what happened. But do you see that moment here? I mean, these two world leaders. Angela, do we know where they're going to meet in Alaska yet?
I don't know where they're going to meet in Alaska. And it's interesting. So for Putin, all he has to do is fly over Russia. If he were to meet Trump in many other places, he probably couldn't, because there are a lot of countries he can't fly over because he's an indicted war criminal. So we don't know. Okay, so maybe they're going to meet on those two islands. They can wave at each other across the Bering Strait. Angela Stent, discuss what's in the zeitgeist this morning of allusions to 2 years before World War II. Well, I think, 2 years before World War II, if you think about Neville Chamberlain, I mean, he was trying to postpone a war because, he believed that if he just gave Hitler what he wanted, which was, talking about what was happening in the Sudetenland, then there wouldn't be a war. I think we may still be at that point. I think there's not a full comprehension in the Trump administration that that from Putin, the subordination of Ukraine is the goal now, but it's the first step towards really retaking influence and land in what used to be the former Soviet Union. And Putin has expansionist aims, and I think maybe in 1938, Mr. Chamberlain didn't understand exactly what Hitler's expansionist aims were. So I think people need to understand what this is about, and I'm sure that's not fully appreciated in the White House yet.
It seems, Angela, that most world leaders around the world have bent their knee to President Trump, whether it's on tariffs or other issues. That's not the case with Mr. Putin. How do you think he views President Trump and the administration?
Well, I think he believes that Mr. Trump really wants to have a better relationship with Russia. Trump started out by saying we need to reset and improve relations. I think the Russians understand that there's inconsistency in the positions of the Trump administration. They're going to push as far as they can. This is the old, if you like, Soviet style of negotiation. What's mine is mine, and what's yours is negotiable. So I think they still believe that they can get President Trump to agree to terms that would be really very unfavorable for Ukraine and would give Russia most of what it wants.
Angela Stein, on the cover of your book, Putin's World, folks, it was my book. I can't remember, Paul, if it was Book of the Year or Book of the Summer. Whatever, read the book. Putin's World, Angela Stent with a new chapter out now. Bill Burns, who has a little bit of experience at CIA, says Putin's World is a definitive guide to understanding the tangled history of post-Cold War Russia and its place in the world. You got a great photo on the cover, Angela. I'm sure you picked it out, of the 47-foot table with Mr. Putin sitting at one end and I think Mr. Macron sitting at the other end. That's not going to be Alaska. Is it going to be all smileys and, arm patting and all that? I mean, is it going to be touchy-feely?
It may well be. I mean, you've seen the pictures of Mr. Witkoff and Putin, Mr. Witkoff putting his hand on his heart, smiling, shaking his hand. I don't know what President Trump will do, but it's not going to be this long table. So I think there will be smiles, at least for the public.
Angela, you're not old enough to remember this. I remember when Khrushchev took a shoe off and pounded it in the UN. Have we treated Khrushchev or Brezhnev or Stalin or, dare I say, Lenin, have we treated them like the administration's treating Mr. Putin? It's absolutely original, isn't it?
Oh, it's completely original. No, we were very suspicious of them. They were communists. We knew that they were at least officially committed to taking over the world. We were very wary with them. Having said that, Nixon and Brezhnev, did shake each other's hand, were all smiles. Brezhnev visited the U.S., drove around in big cars. So there was some of that. But this is a very different feel to what it was like
Paul,
during the Cold War.
This is it's like the new season of Slow Horses. Yeah. I mean, Mr. Trump and Mr. Witkoff and all should just watch Slow Horses. I mean, that's how they got prepared for it.
So, Angela, is there a scenario here where, I don't know, some kind of deal gets signed between Russia and President Trump? And if I'm Ukraine, I'm just sitting on the outside saying, what do I do here? I mean, is that even a scenario?
That's definitely a scenario. I mean, the Russian goal is to sign an agreement with President Trump that's favorable toward Russia and then blame the Ukrainians if it doesn't work out, because the Ukrainians are not going to sign on to a deal that's that disadvantageous for them, and the Europeans are going to back them in this. So that's definitely a scenario that some deal is signed between the U.S. and Russia, but in fact, the Ukrainians won't accept it.
Angela said one final serious question, and this goes back to Mr. Gates and Condoleezza Rice, I believe in Belgrade. I mean, I get it. There's territory in eastern Ukraine, and they've got 4 acres of Russia, It comes back to the emotion of Crimea. Will that even be discussed at this meeting about the sheer reality of Crimea on the Black Sea?
I don't know whether it'll be discussed, but it really doesn't seem to be an issue. I mean, I think the Trump administration is assuming that the Ukrainians can't do anything about the annexation of Crimea, and that they will at least de facto have to recognize that.
What do you need from Secretary Rubio?
Well, I think Secretary Rubio needs to, to make sure that concessions are not made to Putin that are not warranted. He I think, understands the situation pretty well. He was previously at least a hawk on Russia, so he needs to somehow be a restraining factor in this.
Wonderful. This was great, Paul.
Yeah,
I mean,
absolutely.
Angela Sten, thank you so much. On Putin's World, we begin our coverage of this historic summit meeting. It is scheduled for Friday. David Gurl will join us later in the show this morning to provide further briefing. It is a story on the move, to say the least.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Jeffrey Meacham joins now from Citigroup with an acclaimed career counting the free cash flow of healthcare. How much in a value trap is the healthcare sector right now, Jeffrey?
It's pretty bad, I would say. I think the main catalyst is getting over this policy, kind of worry. But for sure, though, these companies and large cap pharma, devices, services, et cetera, are generating a ton of cash. You're totally right. But we just have to get through the policy overhangs that have been prevalent pretty much all year.
Full disclosure, folks, I have a huge bias to Eli Lilly. Some of the fam is from Indiana and were original shareholders back, when the covered wagons were there. Eli Lilly, last 10 years, 26.975% per year.
What?
Yes,
Healthcare?
Eli Lilly is a Mag 7 performance. Jeffrey Meacham, it's tanked the last 12 months down, huge amount down. Is this the buy opportunity of a lifetime in the giant of Indianapolis?
I really do think so. I mean, honestly, if you look at the past week, let's just go back there. The second quarter was fantastic. We didn't see as much, or really saw no resilience, but not as many issues as Novo had, for sure. In fact, they're gaining share, growth rate, raising guidance, growth rate higher. I think the one, kind of negative surprise was the orforglipron data, the oral GLP-1. And that's what happens when you have a higher multiple stock, and people expect 12-15% weight loss, and it's literally only 11. So that's a massive overcorrection, right? That I think is completely ridiculous. We're going to look back in about a year from now when this drug launches, and it's several billion in the first month, and laugh at this. I suspect.
Yeah, Paul, do you see, and for Bloomberg Radio, you're missing this moment on YouTube, you can observe it. Mr. Meacham has the gold trim behind him.
Sure.
In his YouTube video shot, just like the president.
Just like,
it's like, the whole house is gold.
Style. It's a new style. Jeffrey, can you summarize what the regulatory or policy overhang is for healthcare right at the moment, and how you think it might play out?
Yeah, I think the first thing is MFN, right? So MFN is the situation where, most favored nation, where there has to be delineation of pricing, how U.S. compares to OUS pricing. And it's complicated. And I think at the end of the day, Trump just wants to have a win where the U.S. pharma companies get higher prices from Europe. So how that's going to take form, I think it's really not clear at this point. The second thing is pharma tariffs, and that's a lot more simple, and that just is justifying, companies bringing on board new manufacturing sites, et cetera. And that, I think, is, more likely to be resolved, I think, by the end of the year. And as Trump has said in the past, it's been a bit of a wait in, right? You have essentially, 12, 18, 24 months to bring those manufacturing plants, and facilities here to the U.S. And then the last one, it's a little bit more nebulous. I'm not sure about PBM reform. that affects the industry indirectly. And the other piece is just looking at things like, vaccines and how that policy is going to play out. So it's mostly pharma tariffs, and MFN has been the biggest overhang.
Does any of that result in lower drug prices for U.S. consumers?
I suspect it will, but the one angle in MFN is a consumer base, and this is what Trump has mentioned. It's actually pretty insightful. If you look at the U.S. drug industry, it's mostly been, just like Europe, It's been paid for by Medicare or private insurance or corporate insurance. A drug like orforglipron for obesity is perfect for this, right? If you think about how much out of pocket is it worth to you, and so that's something where Trump is trying to involve the consumer angle into this. And I think that's a smart strategy. And every company we've talked to in major pharma this quarter has talked about, that we're trying to figure out how that would play out. But I think that would, if you carve out the PBM industry, they upcharge, I don't know, 8, 10, 15% in some cases, maybe more. That could save the U.S. Consumer a ton.
Jeffrey, do you have a single best buy? We talked Lilly, but is there a Jeffrey Meacham single best buy right now?
I would say Lilly and Vertex are the two that we've liked, and both have been really shelled in the past month or so. But Vertex is one where, look, they have a cystic fibrosis business, which is legendary. I mean, it's 15 billion peak potential, very high margin, but they need an encore. And they've struggled with that, and they have a pain franchise. They have a sickle cell therapy, all that. It's all tracking, but no one's worried about the underlying base business, right? And yet the multiple again has come in a ton. But those two are the best growers, I think, in large cap therapeutics.
This has been a pleasure. Jeffrey Meacham, thank you so much with Citigroup.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
The newspapers she worked all weekend on this. I mean, it's just amazing. I mean, she goes 24/7 to prepare for this. The newspapers with Lisa Mateo, the Monday edition.
The Monday edition, yeah. Okay, so I'm not sure if either of you ever received a ticket in the mail for speeding or those red light cameras.
Parking my Vespa inappropriately at the beach. Got it in the mail.
What did you do?
Yep.
What?
I parked the Vespa in a spot that was not a dedicated parking spot. Boom. Spring Lake hit me up for 55 big ones.
Oh my gosh.
Yep.
Are you going to go to court?
No, but a woman says she doesn't pay her ticket. She says there's no sign that says I can't park here, so I'm not going to pay.
Well, that's the thing. So people are getting mail tickets, right? I don't know if you get one for the Vespa for the noise, because it's not a noisy. It's not like a Harley or anything like that. But there are some noise cameras that are giving people and sending them in the mail, just like the red light, just like the speeding tickets that I've gotten to from that. So they're starting to go up. Tickets can range anywhere from $50 all the way to $800. Wow. People are getting tickets for these noises. And we're talking about loud music coming from it, right? The revving engines, the mufflers that people make on purpose to, beef up the sound.
Ticket?
It comes from the municipality. So there are noise cameras that are out there, and they're tracking as cars go by to see how loud their car is. And if it's over a certain decibel, you will get a ticket in the mail. Nice. And people are getting these. Especially Newport, Rhode Island is a big spot because people are saying who live there, the tourists come in and they're making all this racket, and we don't want it anymore. Sure. But New York City is actually the #1 noise camera epicenter. I wasn't aware of this, but their fine start at $800. They've already issued more than 2,500 tickets since 2021. So they're really, really sending this out. But like you said, people aren't paying them.
I like the signs in New York City that say, don't honk your horn.
And you hear it all the time.
Exactly.
But that's another reason for the noise thing, is the honking the horn. So this is becoming more of an issue.
Next.
Okay, so this one is in Lucas Shaw's Screen Time newsletter. So we've been talking about how a lot more sports are entering the streaming market, right? So he took a look into why Amazon, Apple, Netflix, YouTube are kind of capitalizing on it. He said the problem is that leagues are looking for these bigger paydays, right? Because they're the only kind of entertainment program that can pull in these live audiences. is. But their partners, which are broadcast and cable networks, traditional partners, they've shrunk. Traditional media companies like Disney, Paramount Global, Warner Brothers, they have a limit on how much they can spend. So in order to get these big payouts that they want, they're going to have to divide the rights among like a different and a wider pool of
Paul,
people.
I read this too. Thank you, Lisa, for bringing this up. Paul, if I'm watching the NFL, which folks I don't do much NFL, but if I was on a given game, I really don't. I got like what, 5 places I have to look?
Yeah, including absolutely. But the big sea change will be when one of these Sunday afternoon packages, the ones that either go to Fox or CBS, if one of those packages, which are national packages, go to a streaming service, that's going to be the sea change, and it will happen.
That?
Absolutely, absolutely, because that's just where the eyeballs are. So, so the nobody's better than monetizing broadcast rights in the NFL. They create as much demand as they can across as many bidders as they can. And boom, prices go up.
Quickly, is this because of Pete Rozelle? Do we underestimate what Pete Rozelle invented?
Yeah, he certainly was. But I tell you, Roger Goodell, who gets paid a gajillion dollars a year, has just minted money for his employers, which are the owners.
30 seconds. Squeeze one more in, Lisa.
You got it. Okay, people use ChatGPT for a lot of things, but there's one thing that Sam Altman says he is not very happy about. It's how people are using it as a therapist or a life coach. He said that they're tracking people's sense of attachment to AI, because the problem is people who are maybe lonely or whatever, they go on ChatGPT and they start interacting, and then the queries start, and so it becomes like this therapist. And he says that's not the right way to use it. So that's a little bit scary.
To me, it's a time bomb.
Yeah.
I mean, like the ChatGPT stuff, that's different than doing searches.
Correct, because it keeps asking you, it prompts you, maybe would you like to know more about this? Would you like, and it kind of keeps prompting you to ask more.
Did you spend all day Sunday working on newspapers for today?
Half the day.
Half the day.
Lisa Mateo, thank you so much. The newspapers on a Monday, we promise Tuesday will be an improvement.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.